Porinju. Thanks very much for your time. Great to have you here. We last spoke on the 14th of January, Porinju, and back then, I mean, the market was in the grip of this very large, sell-off phase. Very painful episode for many. And I kind of focused our conversation on what should people do? Should they get out or hang on to stocks they bought in the hope that there will be a quick bounce back? You said, well, for a lot of these mid-caps, there won't be any quick bounce backs. From that point on, I mean, the mid-cap index itself, the mid-cap benchmark is down some 8%. How do you kind of sort of assess the state of the market now, Porinju? Let's begin there. Let's begin with that.
Yeah, good morning, Prashant. Of course, there are a lot of many aspects to your question. See, the markets have been selling off. There's no doubt about that. And what we have witnessed in the first 6 weeks of the 2016, it's a very large sell-off and panic-driven sell-off. You use the word, is it time to, get off from the market? I think these are not words one can use for the equity markets from an investor perspective. These are, people ask me, Porinju, is it the time to exit? Or is it the time to enter? Is it the right time to invest or put money in the market? I feel all these questions are framed, mostly towards trading point of view. People who try to make some money in the short term or try to do some short-term investing or day-to-day trading. So, see, I have been always, promoting value investing with long-term perspective. From that, point of view, I will tell you, Prashant, I am there for last 26 years in the equity markets in India, very active. My only profession I practiced after my studies. I have never seen a bear market. And I don't think I will see a bear market in my lifetime. See, it all depends how you define a bear market or bull market. From my perspective, India is a growing economy, it's a growing developing country, and it has been always a bull market. There can be corrections, sell-off, panics, but it's part of normal market situation, because too much of irrational elements and trading, gambling is going on in the markets. For them, all these are relevant. But otherwise, I'm telling you, be a bull in this country till we become a developed nation. Because in a developing economy, reasonably well-managed country, in a democratic setup, the stock picking, market is always bullish for stock picking. There are different areas, different segments, different industries prosper at different point of time. So a smart stock picker can take huge advantage of that kind of stock picking opportunities in an emerging market. And that's what is going on. I am not bearish at all in the market, and I don't think investors have to worry about this 6 weeks abnormal sell-off in the market. We have seen it many times. This is not something new and first time happening in this country. And this time it is maybe fueled by the global economic scenario and global panic. See, please understand one thing. Indian economy, Indian banking and financial system, Indian households, we have been practicing a lot of conservatism. We are not just, borrowing money and throwing it out. So, this conservatism is the basis on which I am still further bullish on Indian markets.
Okay, fair enough. No, got that. But just to paraphrase what our discussion was about in January, it was about people who are leveraged, who are stuck in positions. The market is going down, and do you, put up more margin, hold on to those positions, or cut your positions and get out? That was my question. And you had said that you don't expect mid-caps to bounce back anytime quickly.
No.
That was in January, of course. The situation is different, but not very different. But anyway, I was not asking you whether one should exit or anything. You had also said in January that you are shifting into large mid-caps, right? Can you just tell us if that is what you're doing and what have you done in that regard since we last spoke?
Yeah, regarding the mid-caps, what I mentioned in the last interview, Because in the last 6 months, 8 months, there was a huge run up in some stocks in the mid caps and small caps, and later on it caught up with all the stocks. There was a general run up. Even a lot of hundreds of undeserving small cap and mid cap companies went up manifold because of our speculation and people trying to make a quick money, and everybody was feeling like missing opportunity, and they were panically buying those smaller companies. So that is not fair. It cannot sustain like that. So that correction I had warned at the peak of the markets, in fact, in December. It's a time to be cautious on the stocks which have run up so much. See, I am always price sensitive, Shant. I don't just get bullish on a stock and go on being bullish on that till I die. It doesn't happen like that. You have to be price sensitive. If the markets, I had an instance, if you see my Twitter account, a lot of people are criticizing me. Why did you buy Alpha Lab? This is something I have never recommended this stock to anybody. It was a casual buying in my personal account. I bought this stock at some 22 rupees. I think the name came in the bulk deal. And some people took the stock to 130, 140 levels in 2-3 months. Sorry, this is about Palred. And even Alpha Lab also, from such a low price, it went to something like 870, 18. Now, when the markets crashed, these stocks have gone down by 50%. Still, they are much above my purchase price. And people who bought it at 3 times, 5 times higher in a short period of time, they feel that I did something wrong. So that is not the way to approach the market. One has to be very much price sensitive and value sensitive. For everything there is a price. Even if it's a Page Industries or a Kitex, or it can be HDFC Bank, I'm telling you, people all are liking the stock because it hasn't fallen. See, for everything there is a price, there is a value. So value investing is something, most important is the common sense. You cannot go with the crowd and the fancy in the market. It is, I don't know, you remember one of our talk, I think you asked me about Gogaldas exports, which I talked about it at around 55, 60 rupees. And Kitex was around 1,000 rupees. So I had a view, Kitex at that price, 70, 80p. And, looking forward, I don't see such a huge growth opportunity. So it was only 3, 5 rupees or 10 rupees earlier. It was 140 rupees a year ago, maybe 1.5 years ago. So people just run the stock like that. It doesn't work. It's very risky. So people who have not been price sensitive are losing money in the market. That's my conclusion. Those who are price sensitive, those who respect value investing and really practice that, understanding what is value investing, they are very comfortable in this market and they will continue to make money.
Sorry, just one quick clarification. You were talking about Ipca Laboratories, which you had bought in your personal capacity. What was the stock?
No, Prashant, it was a penny stock because just today morning also I saw somebody criticizing me for that. Alpha Lab, it's a very small penny stock, not worth even on television. Okay. Now the promoters, I think SEBI has found something about the promoters, some insider trading. So the stock has fallen from something like 140 to 132, maybe 50, 60. But I bought the stock at 23 rupees a few months ago. And I sold it also because 23 rupees I found it's a great value. That is why still it is 50 rupees or 60 rupees. So people don't realize that. The basic issue, I'm telling you, 95% of the people operating in Indian stock markets, they are not price sensitive. They feel the stock is good. They are ready to buy it at any price. That's a very, very big mistake investors, even traders are doing in this country, I'm telling you. And the percentage of people doing this same thing is this dangerous thing is very high. I'm very much concerned about that. And that adds to this too much of volatility in the market.
Yeah. No, absolutely. Absolutely. Now, Porinju, you consider, I think in our one conversation you said companies which are on the brink of a turnaround or change in management can trigger a big, you were talking about that theme for a few conversations.
Yeah.
And I think you like to think of yourself as a bit of a contrarian as well. So I'm going to ask you, what are your thoughts on public sector banks, Porinju? The implicit, I think, belief before you start answering is the fact that one doesn't expect these banks to fail. Government will not let these banks, at least the large banks, to fail. There might be mergers and things like that, but they won't let them fail. That's the starting assumption. Go on, Porinju.
I haven't really liked banking stocks for the last over 13 years now, since inception of my company, Equity Intelligence. We haven't, especially, we never had any PSU bank exposure since inception. It's basically I have been finding, see, the political interference and political appointment of key people, there was some kind of corruptive and, not very desirable kind of culture in public sector banks for the last 1-2 decades, maybe 1.5 decades to be precise. So, and wherein the deserving people don't get a loan, and a lot of undeserving people, manipulators who are influential, who are politically connected, they get loan to any extent. Beyond there, we know we have companies with 500 crores market cap, and the investors value the company for 500 crores. Banks have given 10,000 crores of loan. How can it be possible? That means why the investors look at it 500 crores market cap? It means it is risky. Anything above that. That is why people are giving that valuation. And investors are a lot smarter than the bankers in this country, for your information. Even though they may be doing, they have got their set of due diligence, how to value the bank, how to value the assets and kind of thing. I think, so clear why the private sector is, the well-managed banks are doing so well. In the same country, in the same economy, why the private sector, the public sector and, not well-managed PSUs are doing so badly. It's like a cancerous, kind of thing there. So I will not, I still do not have any clarity. I don't want to do bottom fishing in the banks because I don't know. I would say very, and it's a bad business, especially if you know the PSU bank's business model. What they do, they collect deposits. Basically, they borrow money. They have to pay it back with interest. They lend money. It may or may not come back. I don't think there is a worse business than this.
Okay, fair enough. Porinju, so I just want to focus on large caps today. You said you'd want to shift into large mid caps. What about large caps themselves? Forget the 3 large PSU banks. What about others? Other stocks in the large cap space?
Yeah, what was said then, Prashant, I don't want to be bearish also in the banking sector at these levels. Even in public sector, I don't know. That's the only thing I can. There is a very good possibility.
Point taken. Point taken.
Your question was about banking, I suppose.
Right. No, not banking. Not banking. I mean, you got lots of large cap stocks which have fallen, 50%. And, it's difficult to take a big call like that. I'm going to only buy large caps or mid caps. But that's not my question. My question is, in the assumption that these large caps are large caps for a reason, whatever, they've got better disclosures, management quality, so-called safer, and they've fallen so much. Last said you'd shift to larger mid caps. Why not large caps themselves? And do you see value in any sector there in large caps?
Yes, Prashant. Due to the sustained selling by FIIs, who have been, have these experts in the large cap companies mostly, I think a lot of opportunities are emerging in that sector. But the only thing, it has to be only stock picking. See, unlike the past few decades, investors have to be extremely choosy, whether it is small cap, mid cap or large cap. The changes happening in the economy, in different industries, it is like unprecedented, like never before. So the casual buying time is over. One has to be very, so people will suffer if they go on picking stocks or looking at the cycle or the mood of the stock markets. If they pick some few stocks and make a portfolio, that can be disastrous because many companies they may not exist going forward. So some companies could have been very good earlier, which can go into bankruptcy going forward. So this is something, a very peculiar inflection point we are going through. Coming to large caps, I feel I don't expect this FI selling to continue for very long. I won't be surprised to see FIs turning buyers in Indian markets in the coming weeks or coming months. Because whatever said and done, we cannot forget our economy is very specially placed in the global environment today. We have a lot of positives, starting with the huge drop in the commodity prices, especially crude. And many other factors. This is the only country where internal consumption, the domestic consumption is still booming. Even though there could be pockets of weakness, I'm not telling everything is booming. We have so much of population. All those positives what we used to talk about India, the demographic dividend, or our young population emerging, or the consumption boom, everything is still there. The only problem, people talk about this in a boom in a bull market. Otherwise, people tend to talk the negatives. When things are very bad, market go through a sell-off, it is around the bottom. Then you can see all the trading community, the experts, all of them talk about the negatives, the challenges of the country. It is true we have challenges, and the challenges in every country in the global economy, it is on an increase year after year. So this is something we have to live with that. We cannot look at an economy or the global scenario without any challenges.
Absolutely. Large caps, Porinju.
Yes,
Pressing on.
I agree. Yes, Shant, I feel many companies like the beaten down stocks, especially like Idea, which I have talked about. I think some of these companies, Aditya Birla Nuvo, another stock I'm looking at, both are Birla management. Maybe some Tata Group company, even though I'm not very happy with the management style. I have talked earlier about Tata Global Beverages, perhaps Indian hotels. I feel some of these large companies, I don't know, I'm a bit small, to talk about perhaps Reliance Industries. I don't know what all things going on. I don't know about Sun Pharma or TCS. Not from that perspective. I'm still looking at slightly below those things, which I can understand better, where I can see the growth momentum can take the market cap much higher. Some of these very large mega companies, if you look at the market cap today, they are not that big. And that is the beauty of it, where you have a potential to grow your capital. So that is the way one should approach large caps today, especially those stocks where FIs had an overexposure earlier, they have been continuously selling the stock. So that technically also they are ready to bounce in a big way.
Any view, any thoughts on Tata Motors?
Oh, I don't know. To be very frank, I have never traded in Tata Motors in my life. Not because I dislike or like it, not that way, because that's a stock, which has been always too many people talk about it. Every media talk at least 2 or 3 times every day. So I normally avoid such kind of famous stocks.
Any view on Larsen, L&T, Porinju?
L&T, of course, I have never liked the stock earlier because of the size, and it used to be 1.52 lakhs crores kind of market cap. I think it has come down to reasonable valuation at this point of time. And looking at the opportunities ahead for infrastructure companies, I am very bullish on that sector. Tata, L&T also will continue to be the leader, and it can create wealth from these levels. But I would prefer to companies just below L&T. Some more young companies, younger companies which can create faster wealth in the same segment, in the same economic environment of the country. Maybe, I don't want to tell many names because I may have some vested interest in those stocks. It's very simple, people can find, but with a not clean balance sheet, with a reasonable balance sheet, who have got execution capabilities and who reasonably well managed. You cannot have very, very clean, Mother Teresa kind of promoters for these companies. You have to live with what you have today. And so maybe companies like IRB and a lot of them are there. I like a company called Simplex Infrastructure. I have talked it earlier also. It has come down. And Pratibha Industries at around 30, 32, whatever. They have debt, not that very clean balance sheet. But if the order flow increases, and one more important aspect when we talk about infra companies, Prashant, the margin environment, the profitability margin for these companies are on an increase. Because today there are very, very large number of large-sized projects coming up. And I understand there is a shortage of people to execute them. So in that kind of an environment, the margin of these companies will go up. And earlier, what the biggest problem was, they had legacy orders, and they suffered because they were working at -5%, -10% margins. They had to execute that. They were bound. That is why many of these companies have gone into bad shape, especially with regard to the balance sheet. So now going forward, things can change. There are many companies. There are Ashoka Buildcon, there is Sadbhav. I'm just telling some names coming to my mind. There will be many companies. Some of them may be mid-cap. There can be cute small-cap companies also. I remember KNR Construction. I was very bullish on this stock. I used to buy also at 100 rupees 2 years ago. Because it had a clean balance sheet in the challenging times. Now that is showing it is around 450, 500. Maybe this company can still grow. So look at those kind of companies which have got a reasonably good balance sheet, an acceptable management or promoters, and execution capability, most importantly. I'm telling you, there are many multi-baggers in that sector, and India is going to be the best environment for them.
Fair enough. Porinju, the union budget will be presented coming Monday. Expectations generally are very low. Any thoughts at all, very briefly, on the budget, and if you can throw up a surprise or two?
Expectations are very low. Prashant, I'm telling you, it will be a bullish market, this budget and afterwards. It's a very simple common sense, and we don't have any big problems coming up now. We have many positive triggers in the budget or out of the budget in the parliament session, and let us all hope at least this time the parliament session will go without much interruptions, which can help the country's economic growth. I think the politicians, if they take their decisions, whichever party they belong to, let us work for the country. There is a democratically elected government. Let us cooperate and take it forward. If that kind of an attitude comes, I'm telling you, Nifty can go to new highs very soon.
Porinju, just one off-market question, in a way related back to the market itself. You're based out of Kerala. The Kerala sends a lot of workers, migrants to the Gulf region, right? I mean, according to a survey of 2014, some 20 lakh Keralites are in Gulf states. That's about 6% of the population of the state. But it's not Kerala. The question is not Kerala specific. If oil prices stay where they are or go, head lower, what happens to all the money that migrants based out of Kerala and other states in the Gulf send back to the country? And it's a very large number, by the way. If you total the number up, it's actually quite significant. I think about 3.5% of GDP. Remittances. Are you picking up anything on this? I'm sure you are. I mean, you're in touch with all kinds of people there. What's the sense?
From a normal perspective, it's a very big problem, Prashant. There is no doubt about that. Because I can tell this with authority. A lot of my clients, we have at least 25, 30, maybe 40% of my clients are NRIs, working in GCC countries. And a lot of them are losing jobs. And there is total uncertainty. Even people who have created a lot of wealth working there for the last 10, 15, 20 years, they feel insecure because they are accustomed to kind of lifestyle with those kind of richness and earnings. Now they feel if they lose job this next year or kind of thing, what will they do? How do they take forward their life? So those concerns, uncertainties are there in a big way. But from a stock market perspective, I can tell you, Prashant, my experience is getting positive for the time being, not for long term. Many people being insecure, they are looking for opportunities to invest. So many of them are coming. I had experience last week. Someone, just one NRI, he's an engineer in an oil company there. He is planning to retire. He told that he may lose a job also. He has been working for 20, 25 years. So this is my wealth. So where do I invest? I'm not very keen on land further. I don't want to buy gold. So a part of that money is coming to the equity, yes, open an account. So I think this is a general trend. When there is uncertainty and when there is fear factor in a country or a industry specific problem, India can accommodate all these kind of investments. There's a very much better clarity coming back to our domestic markets, our domestic economy. I think NRIs may invest more into the equities, but the problem is long term and it's very severe. If the oil price continue to be such low or go further down as you told, I feel thousands of more people, maybe lakhs of them may lose job, they will come back to India, which can have a negative impact on the economy.
Absolutely, absolutely. Serious issue. Thank you very much, Porinju. It's a pleasure speaking with you and good getting that perspective across. Thanks indeed.